Hi, and welcome to CMC Markets Trading Outlook for the week of March the 28th, 2016. My name is Colin Szynski, Chief Market Strategist. This week we're going to take a look back at the Fed and how that could have an impact on the markets this week. Most of the focus this week really is on the United States and a lot of the data that's coming out. It's overall a fairly quiet week for economic news from most of the world. We're at the end of the month and we just have a few things wrapping up. But the key is that because Friday is the first of the month, we get non-farm payrolls and purchasing managers, so we get a ton of news right at the end of the week. However, most I think what we'll see in the United States this week is people trying to figure out what's happening with the Fed. 2 weeks ago, prior to the Fed meeting, people had been thinking the Fed would come in reasonably hawkish and essentially signal that they were getting ready to raise interest rates in either April or June. Instead, they went quite dovish. They cut their forecasts for Fed rate increases this year to 2 from 4. They cut their GDP forecast, and so people got a sense that, well, gee, maybe the Fed's going to be more dovish than we thought. That sent the U.S. dollar lower and stocks higher. We've since seen that reverse because over the last week we've seen a number of Fed members backtrack and say, well, no, the economy's doing a little better, and by the way, we're worried about falling behind the curve on inflation, and that maybe we will raise rates in April or June after all. So this week we'll get a better idea of how much pressure is the Fed actually under to do that. Today, core PC inflation came in at 1.7%. It was flat with last month. It was down slightly below the street at 1.8, but the trend is still generally flat to upwards on that. However, there's no increase in pressure on the Fed from the PCE inflation. This week we get manufacturing PMI and we get payrolls. Payrolls is the big one. Payrolls is the one that's a component of the Fed's mandate, and so we'll be watching for that in particular. Strong payroll growth puts the Fed pressure on the Fed to move sooner on the interest rates. The other thing we'll be watching for this week out of the U.S. is Fed speakers. We do have a number of people out speaking. The highlight of the week is on Tuesday. We have Chair Yellen, who hopefully will come out and try and set the record straight a little bit, because we've got some members who are still dovish. We've got Bullard last week, who has been a swing voter all year. At the beginning of the year, he went from hawkish to dovish as the oil price came down and he started to get worried about deflation. Now he's gone back from dovish to hawkish on worries that now that the oil price has rebounded, the Fed could get behind the curve of inflation. So we'll be looking for Chair Yellen to kind of set the record straight on which way the Fed is thinking. We also have a number of other regional speakers, but the only other two other voters that are speaking this week, actually, one is the New York Fed President Dudley on Thursday, and he's been in the dovish faction. On Friday, we get Cleveland Fed President Mester. She's been in the hawkish faction, so that also could make the comments from Chair Yellen, who's been in the middle faction, particularly important on which way things could shake out in the coming weeks heading into the next Fed meeting. Some of the other announcements out this week, we have a number of reports coming out from Japan. We have employment, industrial production, retail sales, the usual month-end things for Canada. We have producer prices. Later in the week, we get GDP for Canada as well as the United Kingdom, and we also get some reports for Germany, including employment and retail sales through the week. Thursday brings Chicago PMI, and we wrap up the week not only with non-farm payrolls but also with manufacturing PMI reports. This is significant numbers for many countries around the world. So we could see trading action through the week, but the biggest news comes out right at the end of the week. And so where are we heading into this? Well, we're seeing here with I'm looking at the chart for the US 30, and we've seen it had a double bottom back in February, and it's had a pretty nice run here lately, but it has gotten overbought, and it's started to level off. Last week, though, we saw it came down, but on Friday we had a hammer candle where it got pounded down and came right back. That suggests, because the question we've seen is this, are we going to get a big pullback correction, or are we going to get a sideways consolidation that could drag on for a while? It looked just as it looked like we were getting into a deep correction. The markets popped back, and now we're back to trending sideways again, which we could see continue in the near term. And we've seen that in the US 30, and also if we look at the S&P, the same sort of thing. We're seeing the markets had a pretty good run here, and now it's leveling off in and around 2040. The US dollar could also be active depending on how people feel about the Fed on any given day. Overall, as we'd seen here following the Fed meeting, we did see the dollar tumble, but it has been working its way back as Fed members have been backtracking. If we look at gold here, we'll see that that gold has been rolling over and does continue to do so. Even though it's kind of found a bit of support here around 1208, this 200-day moving average here about 1196, we could still see it come off. The RSI is also still pointing that we seem to be trending lower on the gold price. We'll look at crude oil here. Same sort of thing. This one I'm going to make a little bit larger so we can see it better. We've had a nice double bottom here, nice rally up over the top here. But look, we have gotten overbought on the RSI. It's starting to come back down. It looks like it wants to come back down to neutral in this 50-ish area here. And this looks like we're just into a consolidation. But we're around 38.30. We could pull back closer to 35.30 in a little deeper correction here. A couple of other things I wanted to highlight here. We have dollar CAD. Dollar CAD has had a nice bounce up off the bottom, similar to the crude oil price. Does look like it's leveling off. We're getting a little bit of a bearish engulfing here. We've run into resistance at 133. This could easily pull back to 131, even 130. So this upward correction actually looks like it's starting to run out of gas, and this is red downtrend may be resuming. The question is, if we're going into a sideways channel, what's the bottom end of it? Look here also at the RSI though, that has rolled over again short of 50, confirms the broader downtrend intact, and it's starting to work its way lower. Although I think this is about 129.20, 133.40, somewhere in this range we may go sideways in the next little while. A couple more charts I'll show: euro dollar and cable. We'll start with euro dollar, which could be active depending on sentiment towards the U.S. Generally speaking, it's in quite a wide range really. That's about 108.20, and up here is about 113.30, 20 to 30 here. We've been working our way up within it. This suggests a weakening U.S. dollar, but if the U.S. dollar strengthens, this could tumble again. This is 111.11 has been a big point, and then these moving averages are in and around 110.50. This is the 110 round number around here. Should the U.S. dollar strengthen for any reason, if it weakens, upside around 112.50, 113. Last but not least, I wanted to show a really key chart here, which is the chart for pound dollar. We're seeing here now form a massive reverse head and shoulders base. Like the left shoulder back in January, the head in February, and the right shoulder in March. And we're seeing this here, that what drove this down. Well, first it was the less hawkish Bank of England that drove a lot of this down, and then the last couple of legs downdrafts were off of the realization that there really is a Brexit vote coming. People are picking sides. People are starting to campaign, and that drove it down to the head. But look, when we were at the head here, positive MACD divergence, RSI divergence, that suggested the downward momentum was reaching its limits. Now we've seen this last round here between cabinet resignations and terrorism, and people thinking that the Leave side generally doing really well in the polls, pushed it down, but not as far this time. So it looks like the fear was really washed out here. It looks like we've got a pretty nice base forming here back above 142. First resistance 143.15, then up here in and around 145 even, and then around 146.20. By the way, falling neckline in the pattern is common and generally seen as bullish by traders. Momentum in the RSI working its way up higher lows, heading towards up and through 50. Also a sign that momentum is shifting from downwards back to upwards. So this looks like it's bottoming out in quite a significant way here. And the pound's not just bottoming out against the US dollar. If we look at euro pound as well, we'll see here, this looks like it's put in the double top. This looks like a bit of a throw over or a bull trap up here, and it's starting to roll back over as well. And look at the RSI, huge negative divergence forming here in the RSI as well, telling you the upward momentum slowing, and this is putting in a big rounded top, and then could start to work its way lower again. So the pound looks like it's been pounded about as far as it may go, and it looks like, at least in the near term, as though it's getting ready to rebound, at least against the US dollar and against the euro. So that pretty much wraps up what I had to say for this week. It does look like it'll be quite another active week for trading, with a lot of focus on U.S. data in particular and what it might mean for the Fed meeting later in April.